What does Nvidia, AMD, and TSMC have in common? Well, these semiconductor companies are all part of the VanEck SMH ETF. Could this ETF be a great add considering it's up 81% in the last year alone? So it's important to note that Nvidia has just become the top company, surpassing both Apple and Microsoft in June of 2024. Your time is valuable, so let's get right to it. SMH is not just another tech ETF. This one is super interesting because it's exclusively based on semiconductors. If you're asking yourself, what is a semiconductor? I'll cover that and the power I see in the next 5 to 10 years, along with how these little semiconductors can potentially rocket our portfolio onward and upward. So this ETF, it's an index fund and it tracks the performance of the MVIS US Listed Semiconductor 25 Index. What a mouthful. It was started on December 20th in 2011, and this ETF has seen a total return of 1,171% in the last 10 years. Now, if you compare that return to the S&P 500's return in the same time period, it's obvious this one has been an absolute powerhouse. So here are some quick facts about this ETF that you might be interested in, but this video needs to be focused on the future. See, the real key here is we're going to try to understand if something like SMH can actually maintain this insane level of growth in the future. So the question you may have is, why do semiconductors actually matter? Well, believe it or not, semiconductors are the backbone of the modern electronic devices, and they enable the functionality of everything that you use. We're talking about our smartphones, our computers, and other digital gadgets. The thing with semiconductors is that they are crucial for the development and the operation of emerging technologies like artificial intelligence, autonomous vehicles, and 5G networks. Here's a related fact. Did you know that us as humans, we can go up to 3 weeks without food, but we can only go 2 to 4 days without water? So we almost want to think about a semiconductor as water. See, without a semiconductor, the phone right here, this YouTube video, the self-driving Tesla car, they can't survive without semiconductors. So this is the demand that will keep on growing as we continue to emerge with new technology. Therefore, if you're not excited yet, this SMH is about to get even more exciting as we dive a little bit deeper. So the global semiconductor market was actually valued at $556 billion back in 2021, and back then they projected it to reach $1 trillion by 2030. Well, it's already there, and as of 2024, the rapid advancements in technology, the adoption of AI, that's what's fueling this massive rise that we're seeing and bringing Nvidia up to the top. In fact, let's talk about the top holdings of SMH. When you buy into this ETF, you're getting direct exposure into these stocks, which of course are massively held up right now by the recent run of Nvidia. But it also has a lot of potential with other very great companies that I see, including Broadcom, AMD, and even smaller companies that are poised for massive growth in the near future, especially as autonomous vehicles start taking off and AI continues to build. And I also want to go off script here as, we look at this on seekingalpha.com. See how the sector breakdown is for this. You can see it's 100% into technology. And that is okay, but I'm waiting for like the big call to make this something different, a different type of sector, whether that's AI, semiconductor, or technology too. I think it's worth creating a different sector that's going to separate this away from technology and kind of call it something different, like emerging growth. That way we can track the difference between our traditional technology and this new emerging technology. And that traditional technology, we've grown up with that, and that includes right now powerhouses such as Apple, Microsoft, etc. And by all means, while those companies are still amazing, it'd be great to see if this level of AI could really exceed the overall traditional technology in the near future. So with this stock up 81% in 1 year, and heck, let's look at 18% in the last month, how do we know this will continue to grow over time? Well, of course, we don't actually know, but what we can do is we're going to draw some great thesis out of the holdings of this particular ETF. So here's what you must know about the current holdings of SMH ETF. Nvidia, of course, that's the big dog that is currently helping SMH rise so high. So let's take a look at that. If you look at the beginning of 2024, Nvidia only had a market cap of $1.2 trillion, and it was the 5th largest company. We fast forward to June of 2024, it surpassed both Microsoft and Apple. So we're looking at the demand for Nvidia is immense. Even Microsoft needs Nvidia for their work. So Nvidia being the leader of GPUs and artificial intelligence, from gaming consoles to high performance computing to AI platforms and technology, it's becoming widely adopted in industries like healthcare, automotive, finance, and for tasks such as deep learning, data analysis, and autonomous driving. There is a massive demand out there. So for SMH to continue to grow, with the power of Nvidia, we'd want to continue to see revenue as well as overall growth in this company. And I'm confident that, with the incoming tsunami of demand for AI and future technology, we have a lot more room to grow. But so even if Nvidia isn't the strong suite in 2026, 27, and beyond, there's actually a lot of great other semiconductor companies that can continue to provide great growth, within SMH, such as the biggest competitor to Nvidia. It's actually AMD. It stands for Advanced Micro Devices, and it's really stepped up since the boom of AI with ChatGPT coming out and other key AI components coming into the limelight. So like Nvidia, AMD is also offering graphic processors, other related technology to both consumer as well as professional markets. So here's something interesting to think about. Even though these two companies are competing, you almost got to think about them as Apple and Microsoft. Both are competitors, but both are strong companies in the stock market. Remember how Microsoft was at the top and then Apple came rising up and it took over its spot? Could we see the same thing where Nvidia is at the top, but maybe a couple of years down the road, AMD comes up and over succeeds Nvidia? That's what's exciting about an ETF like SMH. But beyond these two cousin companies, which by the way, funny enough, I call them cousin companies. Here's a fun fact. Did you know that the CEOs of both Nvidia and the CEO of AMD are actually real-life biological cousins? But let's dive into some of the other powerhouse companies that are located within this ETF as the key drivers of the future, such as Texas Instruments. They design semiconductors for automotive, industrial, electronics, and communications. We have Broadcom. Now, Broadcom's a big company. They're already a strong stock. They're aimed at chips for broadband, wireless, networking, enterprise storage, all those type of things. And then we have Taiwan Semiconductor, otherwise known as TSMC. And that company has the largest dedicated semiconductor foundry. And this company is one to watch as it focuses on enabling the production of more powerful and more efficient chips in the future. So there's actually many more other holdings in the overall 26 companies that make up the ETF. So make sure you check on them, go over to Seeking Alpha, check them out. And if you want more detailed analysis on an individual stock within SMH, drop a comment down below, let me know. And if majority rules, I'll come back and we'll do a deep dive on one of these companies. And by the way, if you're finding value in today's video, use the power of the semiconductor in your device right now to smash the like button on the video. I would appreciate it. But now we've arrived to the most exciting part of the video. This is the one that we're all waiting on, which is really analyzing the performance of SMH in the past, as well as looking at our thesis for the future. So if we compare the one-year return to the S&P 500 and my other favorite tech ETF, which is QQQ, you'll see that SMH continues to outperform the 1, the 5, and the 10-year overall return. So now if you're a QQQ fan like I am, you may be happy to know there's actually limited fund overlap with SMH. So if we look here on ETF RC, we actually see there's only a 27% overlap between SMH and QQQ. So this could potentially be a nice complement to your QQQ. But what are your thoughts about that? Drop a comment down below. But let's talk about the risk. I talked about earlier, we're going to look at the risk about this particular ETF. Even though the performance is great, if we invested $10,000 into SMH, QQQ, and VOO from January 2020 to May of 2024, here's what our balances would look like today. So here's the performance summary. Take a look at this. We have 10,000 turning into 35,000 with SMH. With QQQ, it turns into 21,000. And then with the S&P 500, indicated by VOO, that turns into 17,000. So there's a clear winner in this, right? SMH. shaking my head. That's not actually what it stands for, but you get the point. But here's something that you need to keep in mind, and we need to dig into the risk here a little bit. Even though you could easily say, wow, look at this thing. If you look at the chart here, look at the blue line. The blue line is represented by SMH. One could easily pull this up and just say, well, the clear winner is SMH. Why do I even waste my time with the S&P 500? Well, I could just load all my money into SMH. In fact, I could invest $5 a day or $100 a month, or if you're a big baller, you invest $10,000 a month. By the way, if you're investing that much, let's go get a beer sometime. On you. But the risk behind this is it may have higher highs, but it's going to have lower lows. So let's take, for example, right here. So you can see what your balances are right now between the three. Do you see this? In December of 2021, you have SMH sitting at 22,108. QQQ is at 18,000 and VOO at 15,000. So that's you putting in $10,000 in January. By this point, this is what your portfolio is up to. But look what happens. Remember, 2022 was a bad year for the stock market. With SMH, you're going to go down from what was $22,000 down to the low here, September of 2022, to $13,000. But look at QQQ and look at VOO. You lost money, but you didn't lose as much. So that's something that you need to keep in mind when it comes down to risk. When it comes down to a high volatile, big growth stock like SMH, like the semiconductor industry in general, there could be a big drop. Now, here's what you need to kind of ask yourself and think about from a risk perspective. Take a look at your portfolio, and let's say you have a goal that you're going to invest $50 a month or something like that. Are you okay with continuing to invest when this goes down 10, 15, 20%? Because remember, as a long-term investor, you're probably looking at 26, 27, 28. I'm talking about 2028, right? The next couple of years ahead. If this drops, and we're looking at what is a great stock right now, great ETF right now, it goes down 20%. Do you keep on investing? If you said, no, I'm not going to, I'm going to cash out and cut my losses, this is something you need to take a step back on and really understand your risk in the stock market. See, what you don't want to do is buy high and sell low. That's how you constantly fail at investing. What we want to do is say, look, my thesis is strong. I feel good about semiconductors. I feel good about the future of AI technology. And the combination of both of these, AI driving the demand for semiconductors, will continue to push SMH higher and higher over the years. And if it drops 10, 20, or 30% because of some setback, okay, fine, that's great. I'm going to become a little bit more aggressive in investing and balancing that out. So when that demand comes back, I'm riding that all the way up, and I'm going to feel so good about that. If that scares you to hear all those negative percentages, really take a step back and make sure this is the right thing for you. High risk, high reward, but can also be a very scary roller coaster ride. So here are some of the upcoming risks that I see that we want to keep our eyes and ears on when we jump into this higher risk ETF in the future. So the very first thing is to know that there is a historical volatility with SMH versus the more conservative funds like your S&P 500. So be ready for that. As I mentioned, be ready for the roller coaster. Second, this is cyclical in nature. So the semiconductor industry can have periods of high demand followed by periods of potential downturn. And should a downturn occur, even if it's a smaller one, based on whether that's higher AI demand, just be ready for your portfolio to drop and consider if you should dollar cost average in or make any adjustments to your investing thesis and your financial planning. And the third thing is potential geopolitical tensions. So typically there's trade conflicts that can happen, especially between the United States and China. And that can actually impact the semiconductor industry quite significantly. And if there are risks of export controls, tariffs, or other issues, that could impact the revenue and the growth of companies that make up SMH. And that drop will scare investors in the short term. So my overall view, which is not financial advice, is that this industry is next up on deck to take us to the next level. So if you think about that, even if we do see a setback, maybe it's for political reasons or recessionary issues, the demand for next level technology is strong across the board. So I'm going to go a little bit more off script here and say that, a few years ago, we were talking about the metaverse. We were talking about NFTs and all that kind of stuff. And yes, that can maybe loosely be related to this next boom. I don't think the metaverse has much of a wider adoption compared to AI right now. Every company's talking about it, and that's what makes me excited. The demand and growth all over, and the need for semiconductors to take that technology to the next level has a lot more growth momentum versus something like the metaverse. And I think this could be a huge opportunity despite already being up, significantly over this past year. Comment below with what you want to see next. What ETF, what stock, and if you want to start off small with this, maybe do $5 a day. In fact, a simple $5 a day in my investment portfolio has actually grown significantly over the last 2.5 years. You got to check it out. And in order to do that, check out this video next, and we'll see you on the next video.